What's up, everyone? So, today I'm gonna go over another dividend stock. And before I get into the dividend stock, I would like to say, hey, I'm not a stock investor. I'm not a professional stock investor. I'm not trained by anyone, and this is just me, some guy on YouTube looking for companies to invest in. And I'm just some guy on YouTube. All this is for entertainment purposes, so let me get into it. So, first thing first, I am looking into Kraft Heinz. If y'all don't know what Kraft Heinz is a food brand company. It's sold globally. They make Kraft Heinz, Oscar Mayer, Oreo mac and cheese, classic, Vieto, smaller ones. So this is the companies that they have. They do have a pretty big group. Um, I do see a issue with them with their pricing, and everyone's starting to go away with the name brand stuff because people can't afford it. They hiked up the price, and we can look it up right now. Like Kool-Aid. So one pack is still, this used to be 25 cents. Now it's 50 cents, so more than double. You used to be able to get them pretty cheap, and it's just not worth it. Kool-Aid is owned by Kraft brands. So, and year over year, the net sale increased by 10% with organic sales growth at 10.4%. So, the net income slash loss increased by 447%. And, Kraft Heinz report gross profit of $9 billion for 12 months year over year. So they made about gross profit $9 billion. Now, this is their SEC 11K. Go over real quick. This is, as an investor, we read through this, and my job is to see what their increase was, how much they made year over year. So 2.9 increased to 3.1 billion. This is in the thousands. So we need to add two more zeros or three more zeros, and it's 3.1 billion and 2.9 billion. Right here it says in the thousands. So net asset availability for benefits. So they did increase it by 200 million. Well, 280 million from December 3rd, 2022 to December 31st, 2023. So net appreciation is $445 million. And end of the year, net asset available beginning of the year is 3.2 billion, and end of the year is 3.48. Let's see. I'm just trying to pay interest is 460. Yeah, let's look into meat potato. Let's see how much they actually profit. They have a $29 billion participation loan. All right, that's enough of that. So Kraft Heinz, the ticker symbol is KHC, and Kraft Heinz Corporation. So max, they are below for what I would like to see. They're worth $32 in a 5-year range. If it's up 4.12%. In the 1-year mark, it is down 10.54%. Well, that right there tells me, maybe I shouldn't invest in this company because I don't see it improving. Now, let's see who's invested in it and everything else before I really make my final decision. But right now, I don't think it's worth investing in as an investor. They pay a 4.99 dividend yield, but they lose year to date 15%. So you actually a negative 10% a year, a bare minimum. Even though you're getting paid 4.99% for dividend yield, this is where everyone gets tricked at. Just because they have a high dividend yield does not mean it's worth investing in or having your money in it, because you are losing value of your stock even though you're repurchasing in. Now, if you do have it for a 5 year and not thinking about the short term, it's a 4.12% increase. So in a 5 year span, you look like you might make a little bit of money, but in hindsight 2020, if I look at the max, it looks like it's barely starting to recover from 2020. If I take this point and this point, it looks like it's starting to increase. But let's look at the quarterly income. So the revenue is 6.49 billion and the net income is 836 million. 6.72. So it looks like every quarter their revenue is about 6.5. And let's look at the revenue for annually, 24 billion. Net income is 1.94. So year over year, they're making 12.91 in profit. So owning this company looks like it's worth it if you want to own a company that makes money, because it looks like it does earn money. The issue you have now is that it is losing evaluation in the stock price. If you're all about your stock prices and going for a dividend, hey, this is not a company for you, because it is losing in the value of the stock. If we go over the 1 year mark, it's 15%, 6 months is 14%, 1 month and 5 days is 0.062. Now, it could be at a turning point, but I'm not really seeing it. Well, now the headquarters is in Pittsburgh, Pennsylvania. All right, so now let me go into the Bing. I like to use multiple sites to see what people say. Now the analyst gives a pretty high purchase price, right? Analyst says buy it. Now, here is the performance according to Bing. 5 day is 0.06, negative 0.06. Since last earnings, it's down negative 12.66, and 1 year is 10.54. Now, every single time it looks like it passed its expected earnings per share. Well, reported, that's the EPS, expected earnings per share revenue, and the revenue is forecasted 6.8. So they haven't been hitting the revenue. Another reason why don't invest in them. Let's see. Looking at it, where is, go to in-depth analysis. Hmm. It's just, in my opinion, it's just not really worth it. Now, we could go in and look at the who's invested in it. Let me type it in. KHC. Morningstar gives it a 4.9. Which is not that good of a rating. If I ownerships, I just want to see who owns it. I'm not really worried about the percentage. So Vanguard Total Market Index, QQQ owns a piece of it. That kind of makes sense because it has a high dividend. QQQ is known for high dividend yield. Vanguard, BlackRock dividend. So it looks like BlackRock, American, and Capital Group Wash Mutual Fund exited some of their shares. So BlackRock looks like it's leaving this company. And now I can't say invest into this company. I'm going to look at the 1 year mark. If I draw a line from here to there, it's a decrease. And none of these breaking points are making it. It looks like every single time it hits the points right here, it takes a dive. So yeah, they say it's fair value. And even they say it's a high, Morningstar says it's a high risk. It's a 3 for incident, it's a business. So yeah. So I personally like the brand. I like the food. Even though they're not the best company out there, I do buy their product. The reason why I'm looking into them, but they're just overpriced. Stats, sustainability. It's in the high risk category according to Yahoo Finance. Oh, Berkshire Hathaway owns a 3.25 million share. I think Berkshire Hathaway's on there. They are a good investment company. It's probably one of the best ones out there. But I do have some issues with it now. They don't pay a dividend yield, and they make most of their money off of the dividend. All right. Let's see what news. So, slow rates of return on Kraft Heinz. That's not that good. That was pulled out by Simple Wall Street. So before you invest into a company, you have to check the news. What type of good or bad news is still news. It can hurt the company. You have to see if they're selling, insiders selling, and then you have to see if it's a profitable business. This is a very profitable business, but the stock price is going down because they are not hitting their quotas. The debt reduction from 28 billion to 19 billion in 5 years while maintaining operation costs, income consistency level should eventually lift the value of the company. So this is some of the comments. So beat the bottom line guidelines for year EPS. Trade is 12x earning. Will cover 4.5% dividend. More than 5% drop seems way overdone. Okay. Bullish, whatever. I do think this stock now is not going to recover anytime soon. But if it hits $25, I'll pick some up, because this is a company that earns money. And at that point in time, $25 is get $1,000 worth of share. And, I think it will do well after a while. But Berkshire Hathaway, the one company that owns it, they own a big share of it. They're not going to sell this stock. So they're one of the long-term holders. BlackRock is a good company. Vanguard's a good company. State Street is another good company. So they do have some good top institution holding. And mutual funds are funds that people do buy. BlackRock Equity, Dividend, all these companies, are actually pretty good. Now, if we look at the analysts price it at 35, and currently it's at 32. Earnings, if you look at it, they've been beating it for the stock prices. They do look like they have a good, for an investor standpoint, it does look decent. Now, let's look. Total revenue, cost of revenue, gross cost, interest on income. They are paying off debts too, so not bad. Cash flow. So they have $3 billion in cash flow. So from last year to this year, so 2022, they took a kind of a hit. 2023, they are increasing. So the cash flow of this company is increasing. So I don't see them get rid of their dividends. I mean, a company that has $3.2 billion, that's not bad. I think it's not a company I'm going to go into yet. Maybe if it hits 25, I'll buy some. But right now, until I can see them recover a little bit, because right now they're still on the decline. If you see all these yellow marks, these are analyst rating. And it's just not doing so well. So please like and subscribe to my video. I am not going to invest in this company. Maybe if it's 25, I'll invest in it. But right now, it's not worth it. They do make money. They are profitable, and they are paying off debt. So they do have a bunch of good plus. It's just right now, they're on the downturn on their stock price. So like and subscribe to the video. Y'all have a great day.